Hello, thanks for joining me at the News Forum where all voices matter. This is Strictly Money and I'm your host, Saijal Patel. Home and auto insurance. They're important investments that can protect you in case there's an unforeseen event, such as a fire or flood or even an accident. But let's face it, neither are cheap. In fact, costs are going up. So how do you make sure you get the right coverage so you're not underinsured, but you're also not paying or overpaying for things that you don't need? Matt Hans is here with his advice. He's Vice President of Insurance and Money Sense at RateHub.ca. Hi, Matt. Great to see you.
Great to be back.
So I do want to talk about the costs, the rising cost of living. I imagine it's affected insurance as well, hasn't it?
Correct. Yes. Both auto and home insurance are seeing price increases. The latest consumer price index report identified further increases, especially in auto insurance, was up like 7% in January. And a lot of that's just driven by the cost of the vehicles, the market shortage, the replacement costs that are associated with the vehicles. So just the repairing of them. And that also bleeds into homes. So we're seeing, the cost of materials to rebuild the homes, the labor shortages, all of that is just kind of percolating up and causing the prices to increase.
Wow. Okay. And is technology a piece of this with autos and just a replacement? Because I hear that a lot.
Yes, definitely. And my biggest example on technology, just vehicles are so smart now. But the easiest example of how insurance is impacting, how technology is impacting insurance is that if you look at the replacement cost of a windshield, back in the day, that was about $400 just to replace a simple windshield. Now, the windshields themselves have technology built into them. There could be features that, that trigger, the wiping of your windshield. A replacement of these new, I guess you could say technologically enhanced windshields can be thousands of dollars.
Okay. So let's talk about home insurance. How do you calculate what you need? I have a board based on your website. So I understand 3 decisions that they have to make, right? When looking at coverage for your actual home, liability in case you're sued, and then there's the contents piece. So let's go through this.
Yeah, so we'll start with your dwelling, your house. A lot of that's dictated by the square footage of your property, and then your home insurance provider or your broker will pull a report that basically calculates the replacement cost of your home. And this isn't the market value of your home. This is the actual material cost to replace and build your home. So that's one of the most important factors that goes into calculating how much you're going to pay for insurance. On top of that, you're going to look at your liability. So, it's recommended to have at least 1 million. Some brokers will push you for 2 million. So just make sure you understand what coverage you need. But this is if something happens at your property and you're ever sued, someone slips in your driveway, and that's where liability coverage is going to stand in. And then your contents. That's everything inside the property. So just making sure that you understand how much materials you have, whether it's your electronics, your clothing, your jewelry, just making sure that you get enough coverage to cover everything. But just be aware there are limits on certain items like jewelry. You may need to have a special endorsement there to be able to make sure your entire collection's insured.
Okay.
Sorry about that.
Yeah, no, that's okay. I want to go back to that liability piece. Is $1 million enough these days? Because I do hear of brokers pushing for 2 million.
I think it depends on your property and what you have. If you're someone who has a pool, I would recommend having 2 million. There's a lot of things that could go wrong in that instance, especially if you're having a lot of guests over. The average property, 1 million is still probably okay, but I know a lot of brokers in the market is trending towards 2 million as expenses are just around everything we're seeing with inflation is just increasing. So having higher protection isn't a bad thing, and it's not really that much more.
Okay. And then the content piece, right? Matt, this is a tough one because there's cash value for what you get,
Correct.
And then there is the replacement value. So if I were to go and sell my fridge, for example, I might get $500, but if I have to go buy a new fridge, it's $1,500. So how do you calculate this?
So basically, you have your actual cash value, and that's just what the items are worth today. So what's the actual cash value today of replacing your items? So if your TV today is worth 200, but it was originally 2,000 5 years ago, and and it's damaged in, say, a fire, your insurance company is going to pay out at the $200 level. If you want replacement level protection, It's more expensive. It's an add-on to your policy, but that would insure your items for the value that, when you first purchased them.
Okay, Matt, hold your thought because we've gone to
Yeah.
commercial break. I'm going to come back and we'll talk about that. We'll be right back. Welcome back. Matt, before the break, we were talking about appraisal value or replacement value. So this is an additional cost to your insurance, correct?
It can be, yes, for specific items that you deem to be high in value. So we're looking at your fine art or jewelry. You could get them appraised, and basically they're put on a rider on your insurance policy. So if something ever happens, you get full value. So, example would be you bought a piece of art, it was $2,000 at the time you bought it. Maybe it's appraised now for $50,000. You get that value appraised in your insurance, so that in case something happens, you get your full value.
Okay, let's talk about auto insurance now, because I think the claims would probably be a lot higher than home insurance, given how much we spend time in vehicles. What are the biggest mistakes that you see people make when buying auto insurance?
Yeah. So the first thing I say is not understanding what you need to buy, and that understanding your market. So, for example, we're in Ontario right now. It's private markets. You're able to shop around. So take advantage of that. Shop the market. No two insurance companies will rate you the same way, and they're always constantly changing what they're looking for. And just because one insurance company takes a price increase doesn't mean another one does. So just comparing the market, taking a few minutes to get a lay of the land, can help you find and kind of narrow down what type of insurance and what provider you want to work with. And then beyond that is just understanding what is mandatory versus what is optional. So your mandatory coverages and a standard policy are liability, accident benefits, DCPD, which is known as direct compensation for property damage. It's not in every single province, but it would be in Ontario. And then uninsured motorist protection. So that's what's on your standard policy.
Right.
Then beyond that, yeah. And then beyond that, the things you'd want to consider. I'm sorry, go ahead. You might have a question.
No. I was going to say that's the standard. And do people typically lean towards the standard, or do they need to think about their individual situation and bump it up?
Yeah, not too many people are just staying with the standard. It doesn't provide the best protection for your vehicle itself. Really, in that instance, it's just providing protection in case you're in an accident, so you're getting your accident benefits protection, or if you cause injury to somebody else, so you got your third-party liability protection. When with your physical vehicle, though, you need to look at add-ons like collision insurance, which is going to protect the vehicle if you're in an at-fault accident, so you can get it repaired, or comprehensive insurance. So that's going to protect your vehicle in case it's been damaged while parked or stolen.
Yeah, well, stolen is a big one right now, isn't it?
It is right now.
Yeah.
Very big.
Let's talk about auto renewal as well, because when you get that slip, I was reading your advice is not necessarily to opt into auto renewal. Why?
Yeah, it's the same as when you're looking to buy a policy the first time. It's just taking that moment to compare the market, shop around. A lot of things change in a year. The market's going up, the prices are increasing. Even though you're an insurance company, there is a benefit to staying with them long term. You get a loyalty discount the longer you're with them. Assuming you maintain a clean driving record, you should see your prices decrease. But there are instances where an insurance company, no longer wants people in your market because there's been a lot of theft or fraud in a certain area, and it may be better to shop around. So just do a savvy decision. Shop the market. It may only take a few minutes to use comparison sites just to kind of get a lay of the land and see if you're making the right decision by renewing with your insurance company.
Can you still negotiate, Matt? Do you find that still works?
No. No, there's not really any room to negotiate, unfortunately. I mean, I'm sure I'm sure your broker would love to be able to accommodate that, but unfortunately, their hands are tied with the insurance companies.
Yeah. What else can anyone do to just make sure that they are getting the right coverage? Is there anything we've missed?
If they're getting the right, yeah. I mean, first and foremost is just have an open conversation with your broker or an agent if you're going to a direct insurance company. Just tell them about your complete situation. They should give you impartial advice. They should be able to tell you if you have coverage you need or things you may want to consider. And then when it comes to looking for ways to maybe get cheaper insurance, explore all your options. So are you bundling your home and auto insurance together, or do you have multiple other insurance products, seeing if you can bundle them with one insurer. You could look at alumni discounts or work discounts related, whether you're in a union. You know, just kind of taking those steps to kind of, like I said, really shopping the market and making a savvy decision, I think is the biggest thing we're trying to get across to customers.
Yeah, because as you said, costs are going up, right? I don't know when they're
They
going to
are.
come down, but we know costs are going up. Matt, we really appreciate your time, and I know this is a complicated conversation. There's a lot to look at, but I know you have some great articles on the website, so I encourage anyone to go to RateHub.ca. Matt, thanks for coming on again. Really appreciate it.
Appreciate it. Thanks again.
All right, stay with us. We'll be right back.